Hey, hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Day, the stock market analysis that we have every day where we analyze the technical charts and try to understand what happened in the market during the day and also plan for the trade for the upcoming day. That's for tomorrow, that's March 6th, Wednesday, 2024. So we had number indices in Nifty, while the Banknifty was showing much more strength, but it was flat close, one in the negative and the other in the positive. So let's try to see. This is a quick wrap up, except the institutional selling or buying, the retail and the cash. Other details are looks fine. So if you want to take a screenshot, you may. But before we come back to this, we would first have a look at the charts. Let's take out the bands and all these things. Look at the plain candle. This is the Nifty candle that you see. We see a very small body, and this is almost a doji. Yesterday was a perfect doji. Dojis are indecisive. Dojis could turn out to be dangerous. Here also, if the price moves further from today's candle's low, then it can form a 3-star bearish pattern and could turn out to be dangerous because it's at the very top. But as of now, things looks okay, considering the momentum and the trend that the index is right now. So looks like after a big move on last Friday, it's a matter of small consolidation or a pause that may be happening for the bank to catch up. That's what we can understand at this point in time, because Friday's move, look at this Friday's candle, it's absolute bullish candle, and then we have some pause for 1 or 2 days before market decides on which way to go. But on the contrary, look at the candle of today on the Banknifty. It's a bullish candle. It's also engulfed the previous candle fully, so it's absolutely bullish, although the close was mostly flattish of only 0.25% of gains from close to close basis we see, but otherwise the candlestick looks bullish and it is engulfing, and it's much stronger, and it's one of these rare days with banks close positive and Nifty is rallying all these days just close red. So either way you can see this positively. Now so where are we? The price is on the way to the top of the trendline channel, and we had an all-time high at 22,441, almost there, yesterday. Today we didn't make a new all-time high. We did try to do that, but at 415, at 22 for 415, it faced pressure and came up. But otherwise, intraday, if you check, it was very volatile. Look at this Nifty. It closed flat. That is one thing. But during the day, this is what it did. Right, from 23,400, it fell down to 22. So it's 100 point. Right, so it's 100 point more fall, and then a complete recovery, then again another fall. So it's very volatile with V shapes and inverted V shapes. Very volatile. Nifty is what you say, but finally having flat doji. Bank Nifty also intraday, if you see, it was kind of volatile, but it trended up and broke out in the afternoon to maintain that high. Right. So while Nifty is heading towards the top of the channel, well within the trendline channel, Bank Nifty was very volatile. It retraced much more. It fell down from this blue channel where it is trying to move towards the top of that blue channel. But before that, remember that it had fallen down multiple times. Third time it survived, and it's now formed the W pattern, confirmed that, and then breaking out from there. So it is an indication of a W pattern breakout, box consolidation breakout, another parallel channel breakout. All these things are happening, and it's just another 1,000 points to the all-time high for the Bank Nifty. But if you have a trouble there, that's at 48,000. That's the gap. So actually the gap starts from 47,500, and it's a 500 point gap. So Bank Nifty is within that gap. It is not conquered. Only once it is conquered can we say that it won't do any harm. Otherwise, there is a possibility that it can go hit the gap and then reverse from there. All this are possibilities. So, but otherwise, that's how the price or action in the Bank Nifty is placed, right? So, Bank Nifty candlestick pattern is bullish. Price move patterns formed are bullish. Nifty has been running long. Looks like a bit tired. Taking a small pause after a big breakout on Friday. That's where we are. Let's get back to the summary. So today we have a negative close in Nifty. That's less than 22,400, which it had conquered yesterday. And there is a flattest loss of just 49 points lost. 0.22%. It's a dodgy indecisive candle. Remember, we had a 34% of rally as compared to the 26% of the Bank Nifty rally earlier. More or mainly in the 20 expansion moving average, and that's it. Bank Nifty had a deeper correction, see that, but it managed to close positive today, as against the Nifty, which closed at 125 points up. Nifty was very volatile and flattish. Bank Nifty showed strength in the afternoon, especially when it broke out. So institutionals, Fyers was selling as usual yesterday also. Today's data has not come in, but there is domestic institutions, DIIs were buying since long, and yesterday they bought big 3,500 crore of cash. They might have continued to have done that today. You don't know, the data has not come in yet. We'll just quickly check in between if it has come or not. Not yet. So summary is that institution money is not flowing in right now. That they have been selling big since the last 1 month or more. Well, Bank Nifty money, the mutual fund money has been holding the market. So it's a worry that DeFi is not turning into buyers. And if that happens, that will be the time when the market goes to breakout highs 24,000 levels. The levels of Nifty, if you see, it remains more or less the same. It's at, I'll go back to the charts once again. The first resistance will be all-time high, 22,440, and then 22,500 will be a resistance with the rounding number. It can go as high as 22,750. It's a channel top. So 22,600, 700, all this could be resistance if it breaks up. Downside, the support would be now at 22,300 because it's a place from where it broke out. It did breach that slightly today, but yeah, so it could come in as support. That zone could come in as support 22,300, and the first major support after that would be 22,065 with 20 exponential moving averages there, and then 21,700 is 50 exponential moving average support is there very close by at 22,600. You have Fibonacci 23.6 support. And then it goes to the 100 exponential moving average at 21,150, but you have 21,000 rounding numbers very close by. Bank Nifty, the first resistance would be the 48,000 gap, as I already said, and after that the all-time high at 48,636. Downside, the first support will come in at 47,080, or big rounding number 47,000 could be good support in confluence with the 23.6 Fibonacci support that comes close by. 20 exponential moving average support can come in at 46,600. 46,400 also is 50-day exponential moving average support, and then 46,000 close by. You have the 100 exponential moving average, so big rounding as well as the moving average support. So, and then 50% increase when good support will come in at 45,400. And exponential moving average comes at near 45,000. So that's support resistance on the Bank for the next day. Coming back here, momentum remains bullish but slightly dipped. But still bull zones for the Nifty and the Bank Nifty, while the trend indicator ADX is in the bull zones, but it's having slight weak strength in the Nifty as compared to the Bank Nifty. So Bank Nifty seems to be more bullish, definitely from the moment again trend prospecting in the short-term daily charts. India reaches a cool of 3.6%. That's a good thing. 0.38, but still it's very close to the 15, and so it is slightly cautious because it's slightly outside the low volatility regime. And to keep a close watch, it spikes from 15, 16, 17 towards the 20. But as of now, a cool off has happened, which is very positive. But as the elections coming, it's very likely that the VIX would never cool off really. It will keep on shooting up because of the fear factor, uncertainty factor. Bollinger bands are expanding, continue to be expanding with the bullish bias on both indices, and that's positive. That indicates the potential of moves can be there on both sides. The technical charts shows that it continued to maintain the momentum and the trend gains that it had done the last day's move. It's Friday's moves and W pattern, flat pattern breakouts and all that. It comes again valid. And Banknifty is showing much more strength with the close greater than 20 express moving average, price action turning from lower low, lower high to higher high, higher low patterns. And that 48,000 thing is clear with window gap resistance, then it's done almost. No, it can fly from there. If the fire money is also coming in HDFC, selling does not happen, as it was happening in the last several months. So the industry close in the last 2 days is a concern. We assume that as a pause and not a bearish sign, but it's at the very top, so slight concern there. And then and this last 2 days it is seen that this across the sector there is no buying that's happening, although the market is going up and staying there across the macro, across the sectors, sectoral indices, if it's red, except for the auto, farm and the reality, they're showing some green. But if the daily charts, if you see the momentum, auto, pharma, realty, metal, all of them showing bullishness, and the FMCG, the IT is in sideways. So, yeah, there are several major sectors that's other than Nifty and Banknifty that is holding and driving the market with bullishness. Right? None of them are in the side in the bearish zone set from the short-term perspective. But heavy base they are closed up today also, except for the HDFC Bank, which is flattish green. So daily charts are showing that the Reliance and the ICICI Bank is maintaining the bullish momentum, while Nifty, ITC, two of them have fallen to the bear zone. The ITC has fallen once again to the bear zones. That's RSI less than 40 basically, and Infosys IT sector is slightly falling, and it's a defensive sector, and the Infy has fallen first time in bear zone short term. So we'll keep a close watch on that. But all the other heavyweight stocks of the bank, Reliance, ICICI Bank, ITC. Well, this is the TCS, and I say so yeah, the other three basically they are maintaining the sideways momentum. So yeah, it's the Reliance and ICICI Bank alone that's there, that's holding bullish momentum. So if the active also falls in the bear zones, then we may have trouble. So it's a cause of concern that heavyweights are close today and yesterday. Yesterday it was slight green, better shape than today. So there's yeah, across the sector no issues. Heavyweights, that's because of the Fyers selling, that's very happy. US indices are showing some red, but it had a big rally and it's at the all-time highs. So we have to be cautious as to if some retracements could come in or not. Right? So you have to be cautious there. Keep a watch out on that. Dollar has a flat green that's shown today about 3.9, but rupee remains to be well to since ages. 83 level managed by the RBI. Crude oil is showing some red, but it tried to move about the 80 earlier, but now it's cooled off a little bit at 78. And gold is breaking out. Extremely cautious. Why is gold breaking out when US markets are at all-time high? Time for some introspection. So, as I always say, for investors, every dip is an opportunity for you to invest in SIP mode in quality stocks for the long term. And momentum investing once again with the traders, what matters is the direction. The direction is getting much more clearer. For the Nifty, the direction is from the momentum and the trend perspective is clear, but for the Banknifty, it's still some more time. 1,000 points is left for the all-time high. So I want to see 48,000 gap is resistance is cleared, then the momentum should be in sync. Even though the momentum is in sync, it's in the bull zones, but yeah, some more confirmation with the Banknifty side is required, and accordingly you'll have to apply the strategies. So directional strategies are option buying would work, and then you'll have to stick to the unidirectional selling. For option sellers, it's this the time was a little bit in favor because of the very high IV percentile, and the spread difference between the realized volatility and the implied volatility is somewhere in the 50% zone. So that way did benefit them from the time peak. So tomorrow is the Banknifty expiry. The levels are 46,000 and 49,000. That's 3,000 points just few hours before the expiry of the weekly. That means option writers have no clues where the market will move, but it's bullish definitely. PCR 1.26. It's definitely saying that more option writers to us on the bullish side, and long build up we had for high. So it's going to be more risky on the upside when on the actual players on the expiry day, and probably call buying is what maybe the idea for option buyers, if that's the way it's going to market is going to do. But yeah, very wide range. Why is that option writers have literally the max number of puts sort of 46,000, 3,000 points for? That's something to be thought about. Volatility spikes are coming in, and you got to be cautious. Long unwindings, short callings, all this could happen, and big volatility can be expected considering the range of very wide range, right? Slightly be careful on that with Banknifty expiry tomorrow. That's all I have, and just to summarize, Banknifty is showing much strength as per the candlesticks in the move. Looks like it may be breaking out, but we push about 48,000. Nifty is taking a pause. Indices since 2 days, slightly cautious. And gold is breaking out, and looks is cooled off. US markets at the very top. So the mixed bag, play it safe. Market is at the very top, remember that. If Banknifty is ready to move in, then things are fine. Otherwise, anytime corrections could come, and so careful. Right. Thanks for watching. Happy trading, happy learning, happy investing.